Ever wondered why someone would spend $100,000 on a watch or choose to buy a rare collectible rather than putting the same money in the stock market? Well, the reason is quite simple. What may appear to us as extravagant spending is, in reality, a much smarter investment than stocks and bonds. These investments are called alternate investments. They can be viewed as non-traditional investments designed to utilize excess cash and, most importantly, protect investments against market fluctuations. Welcome back, guys, to my YouTube channel, Practical Finance, where we answer questions on practical financial issues that affect everyday life. In today's video, we would understand what alternate investments are, what are the key characteristics of alternate investments, and most importantly, how they benefit investors. Stay tuned till the end when we would reveal the strategy for investing in alternate investments. So, let us jump straight into it and answer the question, what are alternate investments? Definition-wise, an alternate investment is a financial asset that does not fall in the conventional asset category. Your stocks, bonds, futures, options, ETF, and other assets are conventional, including cash. These assets are listed on stock exchanges like the NSE or Nasdaq. Alternate investments, on the other hand, are different. They are not listed on stock exchanges and do not follow the conventional investment path. Let us now check out some of the characteristics of alternate investments. Most alternative investment assets are held by institutional investors or accredited, high net worth individuals because of their complex nature, lack of regulation, and degree of risk. Many alternate investments have a high minimum investment. These investments also have less opportunity to publish verifiable performance data and advertise to potential investors. Transaction cost and liquidity. Another important characteristic of alternate investments is high illiquidity. For example, investors are likely to find it considerably more difficult to sell an 80-year-old bottle of wine compared to 1,000 shares of Apple Inc. due to a limited number of buyers. Although alternative assets may have high initial minimums and upfront investment fees, transaction costs are typically lower than those of conventional assets due to lower levels of turnover. To summarize the main characteristics of alternate investments, they have high minimum investment costs, have lower transactional costs compared to conventional investments, and compared to conventional investments tend to be highly illiquid. If such is the case, then what advantage do these investments bring to investors? Let's us find out. Some investors seek out alternative investments because they have a low correlation with the stock and bond markets, meaning that they maintain their values in a market downturn. Also, hard assets such as gold, oil, and real property are effective hedges against inflation. For these reasons, many large institutions such as pension funds and family offices seek to diversify some of their holdings in alternative investment vehicles. Also, what needs to be noted is that a lot of investment is made in alternate options like real estate, and commodities are made by institutions like hedge funds and HNI, high net individuals. Well, now we know what alternate investments are, what are their characteristics, both positive and negative, and why they are opted for by institutional investment bodies. Now, as promised, we will understand the strategy for investing in alternate investment options. The fundamental difference between traditional investment options and alternate investments is the low correlation alternative investments have with the stock-bond market. This feature makes them ideal for portfolio diversification. Investments in hard assets, such as gold, oil, and real property, also provide an effective hedge against inflation, which hurts the purchasing power of paper money. There is also now space for the average investor to come in with the advent of alternative mutual funds and alternative ETFs. These alt funds provide ample opportunity to invest in alternative asset categories, previously difficult and costly for the average individual to access. Because they are publicly traded, alt funds like alt mutual funds are SEC registered and regulated, specifically by the Investment Company Act of 1940. Most importantly, what makes them a good investment option for people looking to diversify their portfolio. Guys, this brings us to the end of the video. I hope after watching this video you have now a better understanding of what alt investments are and what advantages, disadvantages they possess. If you liked the video, make sure to like it. Also subscribe to the channel for the similar amazing content on practical finance. Take care of yourselves and your families. God bless us all. Thank you.